Hi guys, welcome to the video, and in this video we're going to be talking about what to look for at key levels. Okay, if that's something you love to learn, okay, if that's something that's been confusing to you before, this is the right video for you. I assure you that at the end of this video you're going to have a lot of clarity and a huge aha moment. All right, if you are not subscribed to the channel, kindly like this video, subscribe, and leave a comment on whatever video you want me to do next, where you're struggling in trading, just basically anything. Okay, you can even send me a hi and I'll send you a hi back. All right guys, peace and love. Let's get into the video. Hey guys, so in this video I'm going to be showing you what you look out for at key levels, okay, because it can get confusing. For instance, I thought about key levels, and I thought in one of my videos, okay, on this channel, I thought about the order block. Okay, this is another block. So now when we get to the other block, what do we look for? Okay, now I'm making this video because I loved the previous video I did, okay, but I wanted to share more value, okay, more insight. Yeah, that's basically what I want to do. I want you to have more insight, something that will be of greater help to a lot of traders out there. So what do you look out for when you get to a key level? Do you look for an evening star? Do you look for an engulfing pattern? All right, now let's get down to it. Okay, now first thing I'll tell you is this: market structure is not it. Market structure is not how, like, the way it's taught. Market structure is not exactly how price moves. Okay, price has quiet times. All right, time and price is what controls the market. Price has quiet times. If you go looking for market structure at that time, okay, you're going to get destroyed, literally. Okay, you need to understand and analyze price. Like, look at price for what it really is. All right, that's market truism. Okay, it's a concept where you're looking for at price for what it really is. You don't just look at the quiet time and just throw it away and just be like, oh, okay, it's quiet, whatever, I'll still force my logic on price. No, you respect that quiet time and you expect price to do something that will help you to know, oh, we're outside of the quiet period. Okay, let me just go straight to the let me go straight to it instead of talking a lot. All right, if this video is beneficial to you, kindly like and subscribe. Okay, now one of the first things you look out for at key level, and this is one of the main things that you actually see, you will notice that price will consolidate at your key level. Okay, now you may be like, oh, that's random, price can just consolidate. Now price is going to consolidate within these times. I want you to take note of this. You're going to take note of from 8 p.m. New York time to midnight New York time. You're going to draw the highest high and the lowest low. Okay, at these key levels, what you look for is that price has consolidated at the key level. Okay, let's say for instance we have a bullish key level. Okay, I can't remove this yet, but we have, just imagine that we have a bullish key level here. All right, or let me close this off first. We have a bullish key level. Sorry, give me a minute, just 1 minute. All right, so imagine that we have a bullish key level right here. All right, so you want to see that price consolidated at it. Now it's not always going to consolidate. Sometimes it can consolidate below it, okay, which is still fine. Sometimes it will be like this, sometimes it will be like this. Perfect. All right, so whichever one you see is still okay. All right, we don't form fit here. Okay, we don't cherry pick either. All right, so when you see this, what price will do to make you to know that it's going to leave that level? It's not an engulfing pattern. It's not, because all those things, engulfing, you can find maybe over 50 engulfing patterns in a day and it will still won't cause the market to move. All right, even from a key level you can find almost 10 engulfing patterns. Which one is the right one? There's a lot of there's a lot of discretion in it, and as a trader or as a good trader, you want to remove as much discretion from the market as possible. All right, you can leave discretion in your risk management or even reduce it as much as possible, because discretion would has a tendency to draw your emotional side to your trading. Okay, but let's remove all the talking. And now, what do we expect? You want to see price displace. What is the displacement? Displacement is fast movement. Okay, all right, fast movement. Now let me give you an example. You see price movement from here and breaking below here is a displacement. All right, how do we know it's a displacement? Because we have fair value gaps. All right, very simple. We have fair value gaps, and if you don't know what a fair value gap is, go and watch my video on key levels. You would get the full understanding there. All right, and in this case, okay, you want to see price close above the highest high of the Asian range. Is basically the Asian range, all right, or that range within that time that I just told you about. Okay, you want to see price close with the body of a candle. You can look for this on the 1 hour time frame, 30 minutes, 15 minutes, whichever one. The higher the time frame, the better for you. Okay, and when you see it, all right, you can even just place an entry there. But it's not always advisable because price can always still reverse. But it will help you to gauge and see bias. All right, then you can look for any ICT entry you know of that you've learned. Okay, any ICT, the other blocks and all of that. The moment but you have to wait for us to close above the range. All right, you have to wait for us to close above the range with the body of a candle, and the moment we close above, that's the time where you can start looking for all your type of entries, the other block entries, fair value gaps, and all of those type of entries. You understand? But this is important first. This must first happen. All right, what else can we look out for at key levels? All right, let's imagine this is a bearish key level. Okay, now that is for Asia, right? I just showed you how Asia can cause us to move away from a key level. All right, but now if it was going to be London session trading into a key level, how would we trade into the key level? All right, you're going to see something like this. You're going to see previous this high. Let's say previous this high is either below. Okay, I'll give you two examples. Below it, all right, then you will see London will trade above previous this high. Okay, into the level, and then we'll sell off from previous this high. All right, it's either that or you see something like this. Okay, let me just correct something first. All right, it does not have to sweep it into the level. Sometimes we are already at the level. Okay, London is just going to, but note the high should not have been swept prior to London. No? But London is just going to touch the level again. Okay, but this time sweep the pool of liquidity as well. All right, I hope you're gaining value from this. Please like and subscribe. All right, help me grow. I'm trying to hit 1,000 subscribers here. All right, so what next? Let me quickly show you another example. Let me not remove that, or let me remove it since it's still London we're dealing with. So just imagine that's a key level. Okay, now another thing that London can do is failure swing. Now in the ICT community, there's something we call failure swings, or SMT. Okay, let me broaden it down. SMT. All right, so the same way we traded and took liquidity, okay, you have to monitor the dollar pairs. You have to monitor the major dollar pairs. All right, monitor EUGU DXY, monitor USD CAD, USD JPY, USD CHF. Okay, monitor NZD USD, AUD USD. Monitor these pairs because we can as well also have a failure swing. Not take out the high. We won't take out the high. All right, but we'll do something like this in London while one of the pairs has taken out the high. Okay, but take note, this pair that did not take out the high will have to hit the daily PDRE, the level as well. All right, so when we have this, is an SMT. Okay, it's an SMT, and is a lovely setup as well. All right, so that's for London. Now for New York is pretty much the same thing. All right, but New York, I would say, is what you can look out for is you look for price to move something like this, hit the key level in New York. All right, then you can look for, let's say, a 15-minute market structure shift or 1 hour, whichever one. All right, and then when you get that, something that will be high probability for you. Remember, the higher the time frame, the higher the probability. And then you look for something like this. Okay, it can as well be previous days high, it could be previous weeks high. All right, something basically. So this is basically what you look out for at key levels. All right, it's not difficult at all. Let me give you an example. Let me give you a quick example. All right, so in this case, we're going to be looking at the weekly key level. Sorry, let me delete everything from my chart first. I hope you are enjoying the lecture. So in this case, we're going to use the 1 hour time frame. Remember, the higher the time frame, the higher the probability. So I want to get the line too. All right. So on the 1 hour time frame, so within the time I told you, although this week was pretty sketchy, right? It was a pretty annoying week, but as you can see, it was a consolidation week. But I'm showing you an example where it didn't work out, right? I'm not hiding it from you. Sorry, a minute. All right, so basically you can do it like this to there. All right, the moment you break above, did we displace? Let's have a look at, did we displace? I wouldn't say we really displaced. Okay, but yeah, let's look for a much more clear example. Let's look for a much more clear example. Go back to the weekly time frame. Let's look at this week. All right, so we are moving from this fair value gap. Remember, key level. Okay, let's have a look. After this, we'll do one final example, and I believe that will be it for this video. So 1 hour time frame, yes. Ooh. Can you see? Like I told you, we can consolidate below the level. Alright, let me add another sweet example for you. Now, take note. This is only for you if you watch to this part of the video. Okay, if we don't have FOMC or we don't have if we don't have FOMC or we don't have NFP, okay, within that trading week, all right, then just take note that Monday is going to be that range. Right, it's going to be a range. So instead of using Sunday, we'll be using Monday. You understand? You can draw the whole range from Sunday to Monday together. And look at how amazing that would have been. Can you see? On the breakout, okay? And you can check, this happens everywhere. All right. Now, if the only time you do this, you use Monday, is if there is no USD bank holiday Monday, Tuesday, Wednesday, all right, and there is if there's no NFP or FOMC news event for that week. All right, that's the only time you can use Monday for the range. All right, so I think that's basically it. And even if we have NFP or FOMC, all right, and there's a USD bank holiday on Monday, Tuesday, Wednesday, all right, you would be using the Monday as a range. All right, so very, very simple. Very, very simple. So I just give you an example of what we look out for, key levels. All right, let me give you a final example. One final example, same weekly time frame. All right, same key levels I've been showing you. All right, I believe you're going to get a lot of value from this. This should really, really help someone. Really, really help someone. I'm sure of it. And if you are the person that this video is helping, okay, please like, comment, subscribe to the channel. It doesn't take anything to subscribe. Just subscribe to the channel, help me grow so that more people can benefit from this video as well. All right, the YouTube algorithm prioritizes videos that people like and comment and share. All right, so just help me do that. So you can clearly see we hit the 50% level of this rejection block. Okay, rejection block 50% has been hit. Now let's go to the 1 hour time frame to have a look at what happened. Remember, I gave you a couple instances. Now what do we do here? Take note. We swept previous week's high. Okay. When we swept it, we kept going. Sorry, the time here is incorrect. No wonder. Time here is incorrect. This time is not set in New York time, so it's set to the default. Please ensure your time is set to New York. Okay, if not, you will make a lot of mistakes. The reason why I was still able to navigate is because I traded through this week, so I understand. Okay, now it is still okay. Take note, it is still okay if just prior to New York. All right, remember we swept liquidity. All right, we went up there just before New York. We hit the level. Okay, and then by New York we had the market structure. It's okay. It's completely okay. All right, you can still take that setup and look at it to have played out. Fair value gap. You could have taken the fair value gap. You could have taken the you could have taken the breaker. Either way, look at how much we moved. So FOMC would have been something you would have even been positioning before FOMC. So this video should help you. This video should help you a lot. Please like, comment and share. And if you want to join my private community, okay, where I give more insights than this, because there's a lot to this. This is just a very, very simplified version. All right, I give a lot of insights. You will no longer be scared to take entries. You will know exactly what entries to take at exactly where. All right, you're going to know what time to be in the market. All right, what time you shouldn't be in the market. Okay, you're going to know what days of the week to be in the market, what days of the week not to be in the market, and you have personal guidance as well. Okay, and it comes with free prop firm accounts plus backtesting and journaling tools to help you refine your edge. Okay, if you're interested in all of this, all right, click the link in the description below. My course is worth $800. All right, but if you're not if you don't want the prop firm account, you don't want the journal, you don't want the backtesting, access to the backtesting software, you don't want any of those things, all right, all you just want is just the course. All right, and access to ask me questions and live classes held with all my mentees weekly. Okay, if that's what you want, there's a link also below for the $300 course. Okay, so that's that. I hope this helps someone, and yeah, peace and love, guys. Thank you so much for watching the video again. Like and subscribe. I love you all.